Hey everybody, it's me, Greg Mannarino. Boy, today is Wednesday, July 15th, 2015. All right, everyone, so this is what's going on right now. Janet Yellen is testifying before Congress, a two-day meeting, and she's trying to set the foundation in some way that the U.S. economy is ready and actually needs a rate hike. Those are her words. She said the U.S. economy can tolerate a rate hike and needs a rate hike. Now, let's elaborate on that. What have we been hearing from the Federal Reserve? And she admitted this today, in her testimony, that the Federal Reserve, number one, is not hitting their target inflation rate of 2%. Employment remains weak. Um, and she also went on to say how the U.S. economy is not really moving forward as fast as the Federal Reserve would like to see it. Look, we also know this, and these are other facts. Anyone can look these up. The labor force participation rate is at a near four-decade low. Four-decade low. The money velocity also at a near four-decade low. So what Janet Yellen is really afraid of, and I would be willing to bet if you follow this blog, you will agree, is asset bubbles. More specifically, a stock market bubble. At the beginning of May, I think it was May 6th specifically, Janet Yellen came out stating that the stock market is overvalued. So this is my take on what is occurring here. The Federal Reserve clearly believes, Janet Yellen's own words, that the stock market is overvalued. These artificially suppressed interest rates, which is stock market manipulation 101. Okay, get into the bond market, suppress interest rates, and it will cause distortions in every other asset. These are facts. Okay, so the Federal Reserve, in my opinion, is concerned about this. She can't come out and say the debt market and the stock market is in a bubble because of our actions, because of what we in the Federal Reserve have done, suppressing interest rates for almost a decade. That, again, is a situation that we're all going to have to deal with as we move forward. All of these extra printed bills that are floating around the world, digital or not, at one point, people will chase the same amount of goods, and you do not have to be a rocket scientist to figure out what that means. We will experience massive inflation at one particular time. History has proven this, and despite whatever you may believe, that is also another fact here. Look, we are currently in a situation globally where world central banks, and I can't think of another way to put it, have turned the financial system upside down, going negative, continuing to slash rates, and there's going to be a price to pay for it, period. The Federal Reserve is well aware of that, absolutely well aware of that. Again, Janet Yellen today, she's pushing home the point that a rate hike is warranted and needed, not because our economy is strong. She's admitting this. She is stating the economy is not strong. The labor market is not strong. Wages are not moving higher. Again, and the other metrics, the labor force participation rate, money velocity, the fact that the Fed is not hitting their target inflation rate, the strong dollar is hurting multinational companies, but she continues to push the point home that she believes a rate hike is needed and warranted. She's really shooting herself in the foot here. If the Federal Reserve does not do this year, there's going to be another credibility problem with regard to the Federal Reserve. So, what I believe, without any doubt, absolutely no doubt at all, is the Federal Reserve, if they do act, it's out of a desperation. Desperation to remain credible. Desperation to stop this bubble from getting worse. Again, look, a terrible price is going to have to be paid for this. The debt bubble that we are in, the stock market bubble that we are in. And Janet Yellen really covered her behind by stating back in May that the stock market was overvalued. She can say, well, I told all of you the stocks were overvalued. So the fact that the market has corrected X, well, that's your own fault. I did warn you. It wasn't just her. Many people have been saying this. Robert Shiller, Nobel Prize economist, winning economist, he came out saying this, and a lot of pretty lofty people out there. I've been saying this for quite a long time. Look, it's beyond the point of being anything but beyond unbelievable. Anyway, I just wanted to put a perspective on this because these are the facts. The fact is the economy is not moving forward, and the Federal Reserve admits it the way that they want it. We are not hitting inflation targets. The Federal Reserve has an inflation target. How insane is that? But those are the facts as well here. We have other metrics here all pointing to the downside. Speaking of the downside, look, this market has made some pretty incredible gains as of late, and there's a lot playing into that. We got what's occurring here in the Chinese markets, the Chinese government getting into the markets themselves, forcing brokerages to buy stocks, not allowing certain transactions to go through, doing everything they can at this point to keep their stock market from really crashing, although it fell 30% in 30 days. That's pretty much a crash in anybody's view. And this issue with Greece can kicking and everything else. But I wrote an article last night on my Seeking Alpha blog, which should really put a perspective on what we should be looking forward to here. Remember, the top of this market, when I said it was going to occur, I called that almost to the day because of Dow theory, something I happen to believe in. Well, I covered that a little bit in an article that I just wrote with two very interesting charts, which you have to have a look at. If you're interested at all in how this whole thing works, I'm going to place a link to that article in the description of this video in the comments section below. All right, so that's it, people. We're going to see how this whole thing plays out. And I tell you, watching Janet Yellen and hearing her comments here, you can see how desperate she is. And she can't come out again and say, hey, listen, the market's in a bubble. But she is saying that beyond any shadow of any doubt. With that said, I'll see you all soon. Over now.